everyone, this is Demel Gonzalez of Heartwood Financial Services. Hey, welcome to our latest financial education video. Now, last month we did a video on the big expense that a lot of times we forget about, which is healthcare costs. And today we're going to dive in a little deeper into a component of that, which is long-term care. Yeah, it's one of those that we oftentimes don't really want to think about, but it's important to consider. And so I'm going to be talking about the three biggest things that we ought to be evaluating without all the sales hype that you oftentimes get when you research these topics. So let's get started. Alright, so the first question is, why even bother thinking about long-term care? Doesn't Medicare cover your health care expenses? Well, they do. They do cover a lot when you have to go into the hospital, and even when you have to get out of the hospital and still need maybe some occupational therapy and some different things at home can be taken care of by Medicare. But what they don't cover is 24-hour care. And maybe if you need help with things like just daily activity, like getting dressed, using the bathroom, help feeding, things like that, or doing the laundry, shopping, delivering meals. And so this is one of the reasons that you may want to consider having a little extra insurance called long-term care. Alright, so Medicare also has a limitation on how much time you can be in a skilled nursing facility, and they will cover the expenses. So as you can see here on the chart, days 1 through 20, usually all covered by Medicare. Then once you start going longer than that, 21 to 100 days, it starts to get a little bit more expensive. They'll cover the most except for $200 a day. And then once you go over 100 days, that's when you're kind of all on your own. So there are some time limitations to Medicare. So if you're in one of those facilities for longer than 100 days, you could be on the hook. Alright, and finally on the why question, let's take a look at the stats. Who will need long-term care? So if you're age 65 or older, what the stats show is that there's a 70% chance that you may need long-term care sometime in your lifetime. Now, it doesn't say how long you're going to be there exactly. It might be one of those short stints that we were looking at before, but it's still, there could be a chance that you're in there for longer. So that's something to take a look at. Alright, question number 2. How much is this going to cost? So of course that's important to evaluate as you look at a financial plan. The answer is it depends. So it depends on the services that you're looking for. So I found this graphic here that illustrates this pretty nicely. You can see if you just need homemaker services and a home health aide, those are the different costs. You're looking in the $50,000 range. If you just want to go in for adult daycare kind of facility or an assisted living facility that's more of a community based, it's going to be a little bit more affordable, anywhere from $19,000 to $51,000. But if you need to go into a nursing home facility where you have a private room or a semi-private room, that's where it can really start getting a little bit more expensive. You see the averages here are in the $90,000 to the $100,000 range. Alright, and so when you look at the costs, you have to know how long you're going to have to be making those payments for care. So we were looking at annual costs before. So here's one thing that we can actually be happy about here, guys. We're going to end up in one of these facilities or using these services for less time than you ladies. As you can see, 2.2 years versus 3.7 years. So for you ladies, you do have to plan for a little bit longer stay because of course you guys live longer, and so that's something also to consider. Alright, so now we're in the part of the video where you're probably wondering, what do I need to do to make sure I'm taken care of if I need these services? Well, there's basically 3 different things that you can do. And so the first one we're going to talk about here is long-term care insurance, which I'm sure you've heard about. All right, so let's take a look at long-term care. And this is an example of a 65-year-old lady. And if she were to buy long-term care insurance, it would cover $3,000 of a monthly benefit with a total of $108,000 in total benefits. Has a 90-day elimination period, which means that first 90 days you can't use it, but you're covered by Medicare in most cases. And it does have a 3% inflation that compounds. Okay, so what does it cost? As you can see here by the numbers, when you're looking at with inflation, you're looking at around $250 a month. That's about $3,000 a year for a 65-year-old female. And as you can also see, that doesn't even cover potentially one of the more expensive options, which was the nursing home care in totality. $3,000 a month is $36,000 a year. So this is really for a chunk of it, not the whole part. All right, so this is the exact same example, but for a 65-year-old man. So same policy with $3,000 a month with the inflation in there and everything. And so as you can see by the numbers, it's about $150 with the inflation protection. That's 150 times 12, $1,800 that it would cost per year. And again, it doesn't cover potentially everything, but it can cover quite a bit depending on what your needs are. Hey, good news. Let me not forget to bring this up, but if you are a couple and you both buy long-term care coverage, oftentimes you do get discounts, savings up to 30%, but a lot of them are trimming that back now, and they're probably more like 15%, but you do get a little discount. Now here's another thing to take a look at, because as you can see by the numbers, it pays to get your policy a little sooner at age 55 versus age 65. Now this is a different policy example. This is a $165,000 benefit policy, where the first one we were looking at was 108. So the numbers are going to be a little higher on this one. But as you can see with the example of that 3% inflation, it's $2,100 example versus $3,100 if you start the policy at age 55 versus age 65. So if you really think that this is something that you may want to use or take advantage of, you may want to consider getting it when you're still in your 50s. It'll save you a few bucks. Sorry, I couldn't help myself. Anyway, the second option you can take a look at is are hybrid policies. This is where you kind of combine these life insurance policies, sometimes even annuities, with long-term care. So there's actually a lot of different variations of this. The one I'm going to explain here is a life insurance policy that's combining with long-term care insurance. Alright, so a hybrid policy basically is a life insurance policy that adds a long-term care rider. And what that means is that if you own this life insurance and you have long-term care needs, they can actually use some of the death benefits beforehand, before you die, and use it for long-term care expenses. And so this is a way that maybe you could get something in case you need it, and if you don't need it, then it goes as life insurance benefit to your beneficiaries. Alright, you might be thinking, wow, this is the best of both worlds. This sounds like a really good deal. Well, there are some little hiccups here, some things to consider. These life insurance policies that add long-term care can be very expensive, because you're really paying for two things. You're paying for life insurance and you're paying for long-term care. So they could be very expensive. But on the good side, you do lock in a fixed premium to get a certain amount of benefit. And as some of you might know from long-term care insurance, those premiums can go up every year, which makes it a lot more expensive over time. So here you do lock it in. But also, they may not be tax deductible, those premiums, which in a lot of cases the long-term care premiums can be tax deductible. Alright, and the third and final option for covering your long-term care needs is, of course, to be self-funded. This is where you basically have enough assets that you create your own insurance company, so to speak, to take care of your long-term care needs. And as you can see by the video, we're talking about the expenses, you need a pretty decent little margin in there. I would say anywhere between 300 and 500K of just extra money that you have in there. And if you don't need it, then great, and go to your heirs. But you do want to have that margin, so you'll want to have some extra assets to be able to cover that. And the only way to really know for sure is to really do an analysis with a computer program or any kind of retirement planning program that's out there, or get yourself with a CFP that can help you crunch the numbers to make sure that you're going to be well taken care of. I know there's a lot to digest here, guys, so if you have any questions, please feel free to reach out. I'm just trying to give you an honest overview of everything. I'm not trying to sell anything, of course. And of course, I'm not an insurance agent selling insurance products or anything like that. This was just an overview for educational purposes. So I hope you guys found this helpful. Thanks again. God bless.